Right, so here we go again, another live trading clinic. So lots of things happening in markets right now. It's very interesting. I speak to a lot of people, a lot of journalists, a lot of different traders, and just again a lot of different individual traders every day. So it's hard for me to sometimes portray, give you guys the best information possible. I think the thing that comes down for me, as always, is that trading is quite hard, and we all see it in different ways. But I think if you approach it in the right way, the whole thing I talk about all the time, the whole way I approach trading is, I'm self-taught. I taught myself how to trade, and it took me 10 years, and I don't know, maybe £500,000 of invested money to learn how to trade, and that was all. Not wasted, but invested money. It took me a long time to understand how to get good, how to kind of get back in the game, and how to successfully, continually make money. And that's what we're trying to do as traders. So what I try and do is give you all the benefit of all the things that I've done that were wrong, and say, listen guys, I can't tell you how to trade, I can't tell you the best way to make money. What I can tell you to do is what not to do. So don't do all the things that I've done. So it's very interesting, because I try and follow a lot of people on FX Street and other places that I present, and you always get, a lot of presenters, a lot of market commentators that have great opinions and they're very educated, blah blah blah, but they don't make money. All they do is they get paid to be on TV and tell you guys things. What I try and do is say, right, okay, well, I'll tell you the things that are going to make you money. I'll tell you things what not to do. And then I'll back it up and I'll put my own trades on with my own money. So that's all I can do. I'm not, again, I'm not trying to tell you, that there's an easy way to trade, or if you trade like me, you're going to make money. That isn't the point. The whole point of these trading clinics are to let you guys ask any questions and get an honest opinion, an honest answer. I'm all about honesty. So ask me anything you want, guys. Anything you want. I will always tell you, what is the honest opinion. I'll tell you things you might not want to hear. I'll tell you things that you probably lose money in trading. But if you approach it in the right way, and you're systematic, and you do things in the right way, you will be able to get that edge. And that's all we're looking for, a tiny little edge. So look in the markets right now, guys. This is my setup, okay? So this is a system I've had made. It looks quite complicated, but to be honest, guys, it's not. Again, this is the overview, so this is a lot of information on one screen. So basically, we're seeing that the euro is having a bit of a rally. We're seeing that the dollar versus the Canadian is selling off, and gold really it is ranging. Again, my call for gold was wrong. I'm not going to lie to you guys, I got it wrong. I was a big buyer here at this level at 1576, and that's a buy all the way back down here actually. Let's get the chart. Screen up. I bought back here at 1564.82 and got out all my position at 1573.56. You know what I made? I made £30 on that entire trade. I made 30 quid. I took all that downside risk from here to here and made 30 pips. Terrible trading. Terrible trading. But just to show you, even people that know or say they know what they're doing sometimes get it wrong. But I didn't wipe my account out. I had the balls, I had the tenacity, I had the understanding to hold it and know that at some point the market will retrace. Okay? So that's just one example. So gold now is selling off. I mean, we look on the hourly charts, and again, it's quite an aggressive sell-off, but you have to look at it in the kind of monthly terms, guys. I mean, look here. I said to you these levels on my previous trading clinics. Once we close below 1602.39, the market for gold is going down. There's no shortage of gold. There's too much gold in the world. So gold is not. There's not a scarcity like oil. I mean, gold is just a physical commodity. It's just been traded by speculators, and that's why it's so high. So gold, for me, to be honest, is going to retrace to, I'd say here. Gold's going to get into 1156.75. So a long way down in gold. And now it's started. It's not going to stop. So gold is no longer a bull market for me. It's going to be a bear market, and we're going to sell. Simple as, guys. You want to understand how it's going to work? Here we are, monthly chart. The up move starts here. A lot of support. To here, the resistance. So gold, It's easy. Trading's easy, guys. Here we go. That's the Fibonacci from the start to the end of the monthly bullish gold move. So once we break below this kind of, I guess it's a bull bear flag, depending on what you want to call it. We broke through this level of trend line here at 1741.70. We broke through my key level here at 1602.39. So gold's going to retrace to 50%, which ties in with 1156.75, the level I just said. Okay, oh, it's maybe 20 ticks above that. We're talking a monthly chart. So for me, you've got a window now to sell gold anytime you want and make 400 points. Well, I mean, get in now. I mean, panel fire. I mean, what do you want me to do? I mean, to be honest, I mean, I can only open the door for you. I can't trade for you. You know, if you want to give me whatever money you've got, give it to me and I'll trade it for you, and I'll give you back more money than you gave me. But that's not my business, guys. You know, if I wanted to trade other people's money, I'd do it. You know, I've had the opportunity, and I've had billionaires, millionaires knock on my door. Don't want it, guys. Can't be interested. It's too much stress. Okay, so what I'll do is I'll trade my own little account. I've got enough money. You know, that's why I live in tax havens. That's why I do these seminars. You know, I'm rich enough, so it makes no difference to me. The only reason why I do these seminars and, you know, engage with you people, because I want to give something back. I want you guys to be as profitable as I've been. And it took me a long time, guys. You know, it took me 10 years. 10 years to kind of be consistent and understand how I was as a person and how I was as a trader. But by explaining things in these ways, I can't make it any more black and white. Okay, this is a monthly chart where we can see that gold is selling off. So selling off is going to have to come down to here at 1361.25, and it's going to have to test around about the 1115. It's got to. That's what markets do. Doesn't matter what the opinion is. Doesn't matter what the fundamentals or technicals are. That's just things move in waves. You know, you look back in the weeklies already. You know, once we break these lows here in the weeklies, down at 1526.88, well, what's it going to test? It's going to test down here. These Fibonacci levels. You know, again, as we go to the dailies, looking more and more bearish. 4 hourly, very bearish. Hourly, you know, it's all about looking at things in the right time frames. You know, understanding where markets have come from. You know, everyone gets involved by trading on the short term, trading 10, 15 minute, 30 minute, hourly charts, and they think that's all the market is. The market trades for, you know, for months and years to get to where it is. So you can't expect to make quick profits. You can't expect to always catch the bulk of the move. So in gold right now, I got caught, okay? One of the famous sayings in trading is, if you pick bottoms, you get smelly fingers. So I tried to pick a bottom. I nearly got carted out and nearly took a really big loss. But there we go, I didn't. But, you know, gold looks to be testing these lows. So where's it going to go? Okay, well, your levels are here, guys. Simple. Gold is going to test 1522.55. Okay, that's my call. In the next 3... Okay, maybe next week it's going to take to get there, but that's what gold's going to test. I'm a massive seller of gold, and so I was quite surprised in myself that I bought gold. But when you see this move, you know, from gold here, look at that move. I mean, how could you not buy into that? It only retraces to here. You'd have to be, you know, I don't know. I mean, I don't know what you'd have to be as a trader to kind of justify not buying at these levels. And yes, the market then pushed through, but it then retraced back to it, to the point, you know, to the pip, guys. So that's what I held out for, that, you know, my belief in markets, that they always move in cycles. So yes, it's going to overextend from here to here. And I didn't know where it was going to stop, to be honest, but I knew at some point I had to retest here. So I had to hold that trade for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 12 hours. 12 hours to get out for a £30 profit. That's too much risk. That's not a smart trade. But, however, guys, you know, we always, as traders, get involved in bad trades. But it's how you manage it. What it didn't do is take my trade out here. In fact, I was buying down here. That's what saved me. Okay, so I didn't take out a £2,000-3,000 loss. I took out a £30 profit, but I didn't lose. So, you know, there's different ways of looking at things, guys. But that's gold. What would you like to look at, guys? You know, what would you like to think, you know, talk about? What product do you want me to go through? I mean, this is my overview. This is what I generally look at. You know, if you want to look at gold or the S&P or whatever in a different view, that it looks a lot cleaner when you put it down this way. So you've got your monthly, weekly, and your dailies, your hourly view, which you always trade in your 15 minutes. Okay, so your 5 minute is your movement, your volatility. So really, what's happening right now in the S&P? Okay, big sell-off, maybe on that bit of news, and then again retested back up. Look again, guys. So the things the market's telling you on the 15-minute chart, three times the market rejected 1555 spot 75 and then sold off. It came back through it and made a higher high. But that's a free trade. You sell that point 3 times, you're going to make money. Only small, but it's money. Okay, I'm just getting some comments through. What's my view on the euro? Okay, we'll go through that in a minute. Fibo, how do you use them in trading on the euro versus the New Zealand dollar? Okay, Chuck, yeah, I'll go through that. And Elemental Loans asking, I don't use any indicators. What do you mean I don't use any indicators? What are these? All candlesticks are indicators. These are indicators up here. I've got RSI, MACD, and stochastics. Stochastics, negative, plus, plus. MACD, negative, negative, plus. RSI, middle, negative, middle. Close, plus, plus. Again, guys, this is 10 years of my knowledge on a computer system. I had some clever chaps in India program this for me. So, all my indicators are what I need to see. I can look at a chart with just candlesticks. I don't need to look at anything else, to be honest. I don't need to trade for anything else. I can just look at candlesticks. But that's what it is. Okay, so, yeah, well, RSI, MACD, and histogram, yeah, you can use them if you want, to be honest. But what are they really telling you? How many times do you look at your charts and go, I'm looking at the histogram, and the histogram's telling me that? What's it really telling you? They're all lagging indicators, element alone, and they're not anything real, are they? They're just what's happened in the past. So candlesticks are telling you what happened in the past. Here, market went up, 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 indecision, carried on going up, found a treble top here at 15572, and sold off. But they didn't decide that was enough, then went up. So levels, your levels are your indicators. Your levels are your traditional, should I say, price action. Price action is just price action. You can't change it. You can't change price action. You have no control over that. So that's why I like looking at charts in this way. So when I have my kind of overview of the indices, it's just very, very simple. I don't need to know about histograms. I don't need to Ichimokuto. It's all nonsense. Markets will do exactly what they want to do, and they present themselves in a format that's easy to read. But what people get confused is, they try to look at these formats in too short a scale. You need to be looking at your dailies, guys. Look at your dailies and hourlies. If I want to trade, okay, the indices, this is how I look at it. Okay, so somebody who makes consistent money, that's how I look at it. Hourlies, 15 minutes. Yeah, where's momentum coming out of the market? Look at that. In the Euro stocks here, okay, Euro stocks. Let's get the cursor up here. Euro stocks makes a rally, okay, can't break above this high at 2605, makes a double top, closes below this level here, which is a Fibonacci 50% retracement at 1602, and sells off. Okay, and that's on the 15-minute charts. Why would you not sell here? Yeah, why wouldn't you? Again, it's all about looking at the charts and how you understand it. This has been an up move, making higher highs, nice and consistent, okay? So the up move is retraced back to this aggressive selling move here that happened way back in the past, but it's not topped this high. It's not retested this high, so the market's run out of momentum. If it runs out of momentum, what's it going to do? It's going to go low. So it runs out of momentum, it sells down, and it comes back. Yeah, remember, 80% of the time, an aggressive directional move will retrace to 50%. From here to here, doesn't make a higher high. Okay, so 26 ticks of risk if you short the market below this high here. Then the market doesn't look back, again, retraces on this little 50%. The reason why I've got a Fibonacci here, I should explain, is I haven't got the Bollinger Bands on, but this high has closed outside the Bollinger Band. And then the next consecutive hourly candle has made a higher high. That's why it's a Fibonacci. Okay, and from that, look, the market moves down. Okay, right through the 50% key level, all the way down to here. Doesn't hit the 100%, but then finds resistance. Doesn't make a higher high, but then sells off. Then look, after that, all the candles go down to these levels here. Breaks through to the, the 161.8. Doesn't hit, again, that's the 261.8. But again, look, it's defined targets. So, what I'm trying to kind of explain, and the reason why these trading clinics are so raw sometimes, is that you can't preempt the markets. You can't really predict what's happened. All you can do is build up opinion of what's been going on in the markets and make some sort of call. But the more markets you look at in this way, the more chance you've got of making money. So the more the markets you look, like I've got the FTSE, the Euro stocks, the DAX, and the Nikkei here, all on hourlies, all on 15 minutes. So I see an opportunity, I'll trade it. Okay, so look, and the Euro stocks for me looks like it's running out of momentum here. Big down move. I'd start buying at 2566 with a target of 2576. Because what else is the market going to do? Where's it going to break? It might break down to 2559 potentially. But again, we've seen a big candle, indecision, market's moved up and down. So yes, it might go down further to 2559, but I'd be happy buying when we start closing above these levels, because that's quite a lot of distance to move. Look at these candles before it. Tiny candles. Okay, so that one big one here, and these 3 red candles here, that's a lot of price action. That has to be retraced. It has to be. Okay? So again, think about this, guys. Think about how the market's moved and where it can go. Okay, pan on fire. That's confusing. P down, but at 38% fib. Right. Not quite sure what that means. Elaborate, please. Okay, so see above on the, you want me to look at the, what is that exactly? The euro versus the New Zealand dollar? Or the Aussie versus the dollar? Maybe use different signals to me, or symbols. The Australian versus the dollar. Okay, yeah, okay, the Australian dollar, right. Okay. Let's just try and find out what this is. Right, Aussie dollar, here we are. So exactly, what are you looking for then? If I was going to Fibonacci, what would I do? Okay, so this is the hourly chart. Okay, so the market's moved sideways, tested lower, come back up, not made a higher high, so the momentum still for me is down. Okay, so if I was going to Fibonacci, what would I do a Fibonacci on? Well, I'd do a Fibonacci from here, to be honest, guys. So the the up move starts here. Makes a double top here. So we've already tested and broken through the 50%. So the next target is on the downside, Fibonacci on 1.2381, which ties in again with the daily level of interest I've got down here. So right now we've seen a major level of support here, down at this point here. Really, in fact here. Again, it depends if you go for the wicks or the candle bodies. I would say the candle bodies are a better point of resistance or support for me. So really, 1.2413 is a great level of resistance we've broken through. And it looks like we're going to close below that. So really, until the market tests 1.2397, really the market is going to hit all the way down to 1.2381 and then maybe below. So, I mean, I don't know. When you're talking about Fibonacci, you're talking about a logical point where markets can retrace to, okay? So Fibonacci is the absolute extremes of the market. So whenever you see an extended up move or a down move or a directional move that takes a lot of players out of the market in a quick space of time, you go from the low to the high. So the low, again, is down to interpretation. I mean, different people might do it in different ways. I take the low from here that for me is the start of indecision. So the market's moved down, but it's only made a low of here, okay? And then that's when I see the market is rechanging its decision. So I do my Fibonacci from the low here to the high of the up move, that double top. But people might take it from the low of this here, of the open, to this one here. But again, that's why Fibonacci and all these things are open to interpretation. So we do it from here to here, but really, what's that telling you? It's not telling you much more than what I told you. The market has already told me what it wants to do by having rejected the highs up here. We see a double top, and I've got levels here. It's rejected one spot to 459, which is daily, and then weekly it's rejected a close above 12457. So naturally, it's going to go lower. So really, when you look at the charts and the hourlies, we're kind of ranging again. The market again moves down, ranges, moves down, ranges. So the market's going to move down, but to be honest, it's going to test these lows, and I think range again. So I'd be happy to buy these levels of interest down here and let it range rather than try and sell into any negative movement. If you wanted to sell the Australian dollar versus New Zealand dollar, you should have done it by now. You know, how much further can it go? It's going to have to retrace back to these key levels here, of where you see a lot of action. So the market might move down to here or here, but I would say in the next 4 or 5 days of trading, we're going to be trading back round one spot, 2418, I would say. So that's what I'd say. I mean, the market's going to have to come back, because that, again, look, take a midpoint here, midpoint here, midpoint here. Okay, the market's not going to suddenly go into here and start trading. It has to come back and test the midpoints up here. Okay, does that make sense then? Is that what you wanted to kind of find out from Fibonacci and what you understand from trading? Well, that's great, Pan on Fire. I mean, that's awesome. I'm almost intrigued about your trading strategy as I am about your name. Anything else you want to look at, guys? I mean, anything else you want me to go through? Again, you have to remember, I always teach that you have to be trading in the right kind of time scales, the right kind of time frame. So try and look at your hourlies, because look here, perfect example in the US CAD. Market breaks down and tests to 1.01327, but where does it close? Yeah, back here. Market tests again. Where does it close? Unless you're looking at the hourly candles, you're out that trade. If you're long, you're out that trade. So you have to understand that the markets will move and manipulate, but very rarely do we see the market, touch these levels and have no reaction. So look at this level down here, perfect. Support, resistance, support, support. Why weren't you buying a 101327? Sorry, in the dollar versus the CAD. So now, when it gets down to that level, it's tested it 1, 2, 3, 4 times. Is it going to break through? If it breaks through, where's it going to touch? 101239, because that's the next point of attraction I've got on my charts. That's how you trade. But you wait, you look for opportunities, you look for the volatility to come back. Okay, you want to know what's going to happen in the pound? I will tell you what's going to happen in the pound. What's going to happen is the euro is finished, right? That's my opinion. That's my view. I've had it. I've had it with the European Union. I've had it with Germany. I'm bored of it. It bores me. I've lived in Spain for 10 years, and I'm guilty of buying, too much property for cheap prices. And I'm lucky. I sold it all, and I made money. But I still own places in Gibraltar. That's a safe haven. So for me, property, Spain, Europe, finished, gone, done. That money's never coming back. So what you're going to do, you're going to sell the euro. You're not going to sell the euro because the dollar's going to strengthen, because it's one unified nation, and it's promoted quantitative easing, and it's one unified country with the same race of people, unifying and getting themselves out of trouble. Europe's not like that. Who cares about Cyprus? Cyprus is a nothing. It's a nothing tiny. I could bankroll Cyprus if I wanted. I could chuck them a few million quid. Bang. That'd sort them out. Cyprus is nothing. They were built by the Eurozone. They were supported by the Eurozone, and they're going to die by the Eurozone. The Eurozone really now is France and Germany. That's it. You can't trust the Italians. They don't know anything. They don't pay the taxes. They're run by people like Berlusconi. I mean, come on. Let's get serious, people. What do you expect? The Eurozone don't know anything. Mario Draghi, I could sit him down right here in my living room where I'm presenting now, and he'd have to come up with some big arguments for me to start buying the euro in any kind of big bulk. It's finished. Absolutely finished. So anyway, what do you want to do then? Stick with the pound, okay? The pound's good. The pound's solid. You know, we have higher than expected inflation. We have lower than expected growth, but we're still pretty sound, to be honest. Would you want to live in England or would you want to live in Greece? Okay? Discount the weather, naturally. But what would you rather do? Who would you trust? I mean, I'm not being funny. I don't really trust Cameron and I don't really trust George Osborne. I think they're a couple of public school monkeys, to be honest. But they are what they are. You know, they're in charge of the country, and to be honest, I think they're going to do a reasonable job to get us out of whatever mess we're in. To be honest, listening to people, you know, Angela Merkel and the people out of France and Italy, these guys are a joke. They're an absolute joke. So think what you want about how the Americas are run and about President Obama. But I think he's a fairly sensible chap, and I think the America's going to do well. I think they're going to get out of the problems and thrive, but it's going to take time. I think the UK will get out of its problems and thrive. For Europe, I just don't feel it. I don't feel that. I don't feel that love. I don't feel the connection. I don't feel people pulling together. So there's more downside in Europe across the board. So in broad respects, buy the pound. Well, look at the pound versus the dollar. Well, again, here we are on the dailies. You know, the pound's lost a lot of ground against the dollar. But, you know, we're starting to recover. We've found a bottom here at 148.900. Again, found really good resistance at 152.237. So the market's in a bit of a mid-range. So for me, we're either going to find support on the Bollinger Band, which is the moving average 20 period here, and these levels at 151200, and the market's going to go up and test these highs. Again, do a Fibonacci, guys. Why not? High here, low here. There we go. If the pound's going to recover against the dollar, it's going to hit here. Okay? It has no choice but to test 155863. It has no choice. It's not my rules, it's not Fibonacci's rules, it's just the rules of trading. If it's going to recover, it's going to hit that point. Guaranteed. So that's daily. So you've got, I don't know, 450 points to start buying it if you want to. Close above levels here at 152.1200. Close above the Fibonacci 23.6. All good. Point, market goes upwards. If we don't, market points downwards. No lines down here really until 1489. So down to you guys what you understand. You know, again, you can buy it up to here or sell it down to there. Don't make any difference to me, guys. I mean, I couldn't care less what you do. I don't make any money off any of you guys trading. That's not my point. I'm just trying to give you my honest opinion. And again, if I saw a good trade, I'd trade my own money. You know, again, I'm 14 in 14 live trade winners. So who else on FX Street? Who else on investing.com? Who else on any other forum gives you free trades for nothing? Start to my Twitter feed. Yeah, at Steve Ruffley. I'll trade and I make money. I take on risk sometimes, okay, but I mean that's a part of trading. But generally, I take on very minimal risk because I'm generally catching the back of a move. So I'm picking the extremes of the market. That's why I look at charts in this way. I look at, you know, the overview, and people might say, yeah, okay, that looks messy, Steve. Okay, it looks messy, but it allows me to pick out opportunities. I don't trade off these screens. I just see what the markets are doing. But the market's rejecting highs up here in the Euro Swiss, I might get interested. I get more interested here, where it definitely, you know, 4 tops, pretty much. Or again, I'll get interested in the Aussie dollar here. Come all the way down. Seems to be it's rejecting these lows here. So maybe here at 104093, the Aussie dollar might be a cheeky little buy to get back up, you know, to range. So it's all about picking your trades against what the market's done to what the market is likely to do. There's no point in really trying to, you know, make trading overcomplicated. You can specialise in the dollar, commodities, indices, stocks. It makes no difference. I couldn't care less what I trade, to be honest. I've got all these different setups like this, so I can trade anything. If it does look interesting, I stay away from it. So again, look here, guys. You know, the Euro stocks for me looks like it's running out of momentum. Yeah, so 2555. That's a buy for me. Buy here, get out here at 2556. That's a good trade. Okay, guys asking what size of stop loss do you use? 40 pips or less. Okay, good question. Stop losses for me, it depends on what style of trading you wish to adopt. If you want to be a scalper, you have to have very, very tight stops. You have to have very low threshold for pain. I'm more of a the market moves in waves and cycles, so I'm happy to not use stops and average in. So I use averaging in as my stops. So where I think I should get out of the market, I actually buy or sell more. So I might sound a little bit alien to people, but that's how I get involved. If I'm involved in the extremes, I know other people are involved in the extremes. So it has to come back. But unfortunately, to adopt that style of trading, you have to have sufficient margin, sufficient capital. And that's why beginner traders lose, because they're trying to find that perfect entry, perfect exit point, and only have a small amount of capital in order to service that. So all the professionals, all the gurus will tell you, you have to have 1 or 2% of your account capital risk in each trade. I'm telling you, that's impossible. If you're trying to make any kind of money off that kind of margin, you're not going to do it. You need to be running more 10 and 20% of your capital, but then trade less. Okay, so don't trade once a day, trade 3 times a week if you want to trade that strategy, but you'll make more money. Liquidity providers and the exchanges and any spread betting company want you to trade more. They don't want you to lose, because once you lose your money, you stop trading. They want you to make small amounts of money often, because they make money on the round trips. Every time you trade, they make money off the spread. I know, because I run one of them. Simple as. I wouldn't tell you a lie. Why would I? How would it benefit me? People and spread betting companies make money through turnover. So they want you to be profitable, and more importantly, they want you to be consistent. They want you to consistently have a run of winners, a few losers, and then carry on. That's what keeps people trading. The more you trade, the more they make. So spread betting companies aren't looking for you to lose money, or particularly make big winners. They're looking for you to keep yourself involved in the market. So by trading in this way, you're going to do that, because you're taking away the risk, and you're just only looking at products. You've got an edge. So don't pigeonhole yourself and just be a FTSE trader. Don't pigeonhole yourself and be a gold trader. Look at any product. Okay, I've got these quick opportunities. Okay, so the quick opportunities, give it a sec to load up, guys. There's quite a lot of data in this, so 1 second. So these are quick opportunities. Okay, so this is basically all the windows I can fit. I just do simple things. I do key levels in Fibonacci. So the euro against the CAD, bang. You sell the Fibonacci level here, pre-drawn in, you make money. Okay, what more can I say to you? You know, again, these are pre-drawn, so they don't happen on every chart. There's nothing on these charts. Let's look on the third chart. Okay, nothing great, but that's 3 profiles that are set up. So you could have made all your money based upon one trade. Okay, so we go back to this quick opportunity. You could have made all your money on the CAD. So you're looking at all these options, all these windows for a trade. Nothing's kind of screaming, sell me or buy me. That's screaming. I make a higher high in the US CAD, can't close above it. Market does nothing in 2 candles but sell down. That's all your money there. So you've looked at 1, 2, 3, 4, 8, 12, 24, 36 screens, 36 products, and then 3 templates, and see one opportunity. But that makes you, you know, if you hold on, you're brave, you sell pretty much anywhere here. Sorry, guys. Okay, guys, seems to have a bit of a screen freeze. Can you guys still see me? You 1 second, guys. Whoa, okay. This isn't good. Okay, guys, 1 second. Right. Okay, guys, a little bit of a technical problem here. 1 second. Right, okay, back in the game. So, like I said, I mean, you're looking at these 36 windows and different products, but the one, you know, the CAD stands out. You know, it's nowhere to high, and it's looking to move off. So all you do is basically pick out the charts that look interesting. You know, candlestick charts are just candlestick charts, they're just data. It doesn't matter with the pork bellies, indices, commodities, currencies. What does it matter? It's still easy. You know, all you have to do is look for what the markets are finding the extremes, and then trade with or against it. That's how I trade, guys. It's not more complicated. Okay, Mike. Well, to be honest, Mike, I offered my MetaTrader 4 setup for free, and nobody took it. So I kind of got bored, to be honest. You know, if you guys don't want it, then I'm not gonna arse around, to be honest. I'm not gonna bother giving it to you guys for nothing if nobody wants to use it. So no, I've kind of stopped. It's still available if you want it, but nobody took it up. So I'll just continue trading it myself and making money. You know, that's what I do. But yeah, it's still out there, guys. It's still available if you want it. But again, I can only open the door, guys. I can only open the door and show you what I make money from. I can't trade for you unless you want to give me your money, and I'll do it for you. But I've never been that interested, to be honest. I've never been that interested in having client money. I've never been that interested in making richer people rich. I'm trying to make myself rich and keep rich. That's what I want. And I do these things, guys, because I get paid a lot of money to do it. I ain't doing it for the fun of it. But I want to bring you guys things to the markets. You know, it took me 10 years to learn this kind of stuff, and you know, it makes me laugh. You know, you have all these different, you know, webinars and people with opinions on FX Street, but who's backing it up with their own money? It only seems to be me doing it, guys. So I've not put a trade on today, but not to say I wouldn't. I'm 14 in 14 live trades, so you know, I've nothing to prove. You know, like I said, you can follow my account on Twitter. It's my money, it's live, and it's on Intertrader, who I'm the chief market strategist for. It's not play money. I won't put my money with somebody I didn't trust. Anyway, guys, I mean that's my kind of like overview and my view of the markets. Okay, there's lots to take away from these kind of things. Have your chart set up in this way. Look at your overviews. Look at the hourlies, the dailies. Try and pick your moments. And if you do that, you're going to find much stronger, much better opportunities. All right, guys. Well, like I said. Stick to trading, keep with it. At Steve Ruffley, that's my Twitter handle. You can find me, Google Steve Ruffley. I'm not a difficult man to find. Ask me any questions. I'm always happy to help people. Again, I try to be very different than most educators out there. I try to give you trading as a real person. I'm not, although I'm chief market strategist of Intertrader, I'm also a real trader. I trade the monies every day, the markets every day, and I make money. But also, I just do it by doing things that I know work. I just stick to the basics. And all these charts are complicated and lots of lines. This is just past price data. That's all it is. It's high time frame data on hourly charts. That's as simple as I can make it. So if you want to go and make your own MetaTrader software, just do that. Put your hourly, weekly, and daily time frame levels on a lower time frame. That's all I do, guys. You know, it's as simple as that, and I consistently make money by picking opportunities. No worries, guys. Like I said, I mean, I'm trying to be honest. I'm trying to be, you know, a trader for everybody else. I'm not somebody. I'm featured on Reuters. I speak on FX Street. I'm a commentator on FX Street, investing.com. I'm the chief market strategist of Intertrader, but I'm not some hooray Henry from Cambridge with daddy's money. I'm just a normal guy from Bolton who makes money in the markets by approaching them in a methodical way. And it took me 10 years, a lot of money, to find out how to do it, guys. And that's all I try and bring back. The markets are difficult, and it's difficult to make money, but the markets aren't that complicated. If you dedicate a bit of education, a bit of time, you'll be good at trading. You'll find what works. But you have to play the odds, guys. Trade more than one product. use setups like this that are free on MetaTrader and look at lots of things. Find the edge. That's all we're searching for as traders. You know, being a trading detective, trying to search for that edge. Alright guys, that's pretty much my time I think on FX Street today. Sorry it's a little bit late in logging on. I didn't actually have this in my schedule, but there we go, we all make mistakes. But hopefully you've understood how I trade and how we understand. Well Mike, just keep following me. Keep following my webinars. That's the only way you're going to learn, to be honest. Follow my webinars. I'll put it down here. I own a site called Trader Maker. Yeah, tradermaker.com/events. That's everywhere I present. Okay, so there'll be trading clinics. Join me tomorrow on Intertrader for live non-farm payrolls. Okay, I'm expecting a weekend expecting non-farm payrolls at a big sell-off, but that might not be the case. But you know, okay, guys, you know, just follow me. Follow me, and if you like me, guys, add me to your Twitter. Send an email to your friends. Help me out, guys. I'm giving you all this stuff for free. I'm giving you my trading system, my live trading calls that are 100% right now, and I'm free. I'm free. I never charge my education. So it has to be good, guys. It has to be. Okay, guys. Well, again, sorry for the late start. Cheers to Vicky and more than the guys at FX Street. Anything else, guys? Follow me on Twitter or just email me, steve@intrader.com. Alright, guys. Have a great afternoon and happy trading. Cheers.